It's tax season, and a lot of people gonna get some money back this year. And if you parents and your kids is under 6 years old, you're gonna get $2,000 tax return. Well, there are a lot of different options to spend that money. Some people pays their debt. Some people buy new things and spend it. Or you can take that money government give you for your kids because of your kids and invest it for their future. How's that gonna look like? We all live for our families, our loved one, and we all want to leave some things for our kids. Real estate, some money saving for their college, or whatever. We love our kids more than ourselves as a parents. Now it's 2 years. I have 2 years old girl. The second one is gonna be any minute. My purpose in life is my kids, and I want the best for them. What if you invest that money in a place can get a good interest and build a future for them? We cannot call it investment because it's life insurance, but it's better than investments because there is no risk on that. What is my suggestion? Well, you have to do your research. There are a lot of options to invest for your kids' future. But my favorite one, I do have it for my kids, I do have it for myself, is IUL, Index Universal Life Insurance. When it's coming to life insurance, still some people think life insurance is only when you die, money goes to your family. But it's not true. It wasn't true forever. For example, Disney used his life insurance to found it for Disneyland. Ray Kroc used his life insurance and the cash value to pay off some of the debt they had when they started the company. So rich people use life insurance for, they call it cow money. It's a money you can put there, get a very safe interest if you choose to be index, in average 6, 7, 8% historically. Last 30 years, and is going to index account, so your money is not in the stock market like 401k and gets interest between 0, 10 to 15%, so you never lose money. So but when you start young for your kids, two benefit is there. One, they already gonna get approved for life insurance. Not everyone gets approved for life insurance, you have to know that. Based on your health, your situation, insurance company make decision to give you life insurance or not. But for kids, it's easier because they are healthy. There is no exam, there is no blood test or anything, and they get approved. Now, the first benefit is if they grow up and they got sick, now they do have a life insurance. They don't need a test, and they can increase or decrease or change the benefit, whatever they want, and there is no another new exam. It's very important. For example, my wife cannot have life insurance because of some health situation ever. Or me, I'm getting older, my price is very high. Last year, because I had a little bit higher cholesterol, when I applied, my price was very high than normal, just because I had a little bit high cholesterol. Not to need a medicine, but for insurance company is very important, and they very picky about how they want to make a decision. So they are going to have that life insurance forever. It's lifetime until they're alive. And the second part is because they started early age, most of the cost of insurance is so low, most of money going to get more interest. Here in this example, just with your tax return, child support, $2,000 this year, if you don't do anything else and just invest that $2,000, and we can call it invest, you can save it and put it in the IUL for your kids. And if you do that until they are 18 years old, for example, my kids 2 years old, you open an account right now if you have 2 years old, and just put that $2,000 until he or she's 18 years old and nothing more. First, it is adjustable. You can change it anytime. You can add money if you have more money. If you don't have it, you can just ask for minimum pay or use the cash value to pay it back. It's flexible. You can do whatever. They turn 18 years old now. If they like to put some money there, they can. If they don't do anything, so you just open an account today for them, 2 years old, and transfer annually that $2,000. You got it from tax return for them to their account. When they are 65 years old, they have $1 million. Well, they don't have to wait to have access to that money. To any minute they can have access to that money. It's just an example. Here's 2 years old. If open an account today, today rate is 5.5%. Stock market is down, but an average 5.5%. But historically, 7 to 10%, 7 to 8%. IUL, we get it. The minimum right now is current one is 5.5%. So in age 2 years, you put $2,000. Age 3, 2,000 until age 18, 2,000, and you didn't pay anything after that. So totally $34,000. When they turn 18, they already have $52,000 in their account. Also, the death benefit is $188,000. The first day they start, the death benefit is $132,000. About the death benefit, it's not only when you die. Death benefit today is coming with living benefit. What is living benefit? If you get sick, critical injury, critical illness, you got car accident, you got cancer, heart attack, you can use your death benefit when you alive. So this is money. This is money exists there, and you can use it if you got sick. And this is cash, so you can have access anytime to that. Another good part about that, if you follow the IRS law, it is tax-free. If your agent do it correctly, it is tax-free. So until 18 years old, you put $2,000. Now they are 40 years old. They put nothing more extra. They already have $200,000. While they want to go buy a home, they can take from here and then go buy a home. They are 18 years old. They want to buy a car. They can take it from here and they go buy a car. Now, you don't have to pay it back. If you do it in the right way, you can take a loan against that, like the $52,000, $40,000, you can go take a loan against that. It's a different story. So you leave that money and then they take from your death benefit that money you own them. So you don't have to pay it technically. We call it loan, but it's a wash loan. You have an option to pay it back, but if you don't, it's go take it from your death benefit. So now he has or she has $200,000. Age 50, $421,000, $700,000 death benefit. Age 60, $750,000 cash and $900,000 death benefit. Age 65, $1,033,000. You put only $34,000 for your kids, and now they have $1 million in their accounts when they are 65 years old. If they put nothing else, I know $1 million from now to 65 years old is not a big money, and if you want to make it equal, it's close to $400,000 today money. If in inflation is 3% in average, but it still is a huge money. You leave it only with the government money for them. Now they are 65 years old, they want to retire and they want to have retirement money, tax free. So age 66, they want to take, you can change this year too. They want to take retirement money, income. They can take $95,000 income, plus they can take $95,000 loan from it, comes from the death benefit. So $200,000 they can have yearly just with the money you put it here. How's that work? It's lifetime. You don't go run out of the money if you follow the rule. Like age 71, they already used it $500,000 income, plus they could get a loan for $600,000. So age 71, they could use $1 million and still they have money. So you put $34,000 government money, and they already used it in 10 years, $1 million. Now age 81, they used it $1,490,000 income, and they could get a loan $2 million, and still they have money. This go lifetime. In age 90, they still get money. So what is other plan you know? What other plan you know can do that? What other investment you can do for your kids to do that? What's the better way to spend that $2,000? Of course, you can go buy a used car. You can buy grocery with that $2,000 and it's gone. You can do whatever you want. But what if you give it back to your kids? What's that gonna do for your kids? I know what's gonna do for my kids. My kids never need to get a loan from bank. Never going have a problem with the money again, because anytime she needs money, doesn't go to bank, goes here and take money, loan, and use it. If you want to bring it back, cool. If not, my girls never gonna have financial problem, because the job I did today, not a big deal. That's not my money. It's a government money, and I've just put it back for them. And also, if something happened this between and they got sick, they don't have to be worried about medical bill, because no matter what kind of insurance you have, it's not going to cover everything. So if you get a very serious health issue, then you have money here in the side, and so you don't worry about money. You can use that. And when they turn 18, you know what? They go work, they make money, they can keep that and then add more money. So versus than 1 million, maybe they can have 10 million. Who knows how much money they can add it after that? It gets compound interest. And it's the 5.5% interest. Of course, market is gonna go up and they're gonna make more money. So you parents, I know you love your kids. I know you want the best for your kids. I know you always sometimes thought about how you can help them in future, what you can leave for them, and you don't have a lot of money. I got it. Inflation is high, economy is down. We don't have average American a lot of money to invest for your kids. I got it. But this is a free money you get from government. At least you can do that. At least you can help them with this policy to have some backup for their life. Anytime in future they have financial problem, they can go tap on that and take money from that, and they're gonna thank you about that. Think about 65 years from now, you passed away, they get retired, they don't have a problem with financial, and anytime they take money, they're gonna remember you and they're gonna thank you because you did this 50 years ago. You just put 34,000 in 18 years, and then the rest of their life is guaranteed. They're not going to have any issue. So to parents, to grandparents, if you want to have an actual number for your situation, for your kids, for your grandkids, and you want to see your option, no obligation, no charge, a free consultation, you can sit with me. Schedule a time with me and we go. It's in the system. You put the number, age, health, and they give you a number. Then you make a decision. This is a good plan for you or not. I do have it for my kid, and I'm waiting for my second baby born. The minute she born, she can have one of this, and she will. I'm gonna do it for her too. And then if something happened to me 10 years from now, 20 years from now, something happened to me, they do have that one forever. And that's my legacy. That's what I can leave. Next to other fortune I'm going to leave for them, or whatever I have is for my kids in future. But this is something in their name for themselves, and they can use it forever. So if you are that type of parents and thinking about saving and investing for your kids' future, that might be your answer. And send me a message and I'll be happy to help you.